Today's session will focus on regulatory agencies of financial institution. Central Bank of Nigeria. The central bank is the apex financial institution in a country which is responsible for the management, supervision and control of monetary affairs and financial institutions of the country. Function of the central bank. Banker to the government, manages government revenue accounts, makes payments, lends to the government, and manages national debt. Issuing currency, sole authority to issue all paper money and coins. Banker's bank, commercial banks are required to keep deposits with the central bank. Clearing house, facilitates the settlement of interbank debts. Lender of last resort, provides emergency loans to commercial banks to meet customer demands. Monetary policy. Monetary policy is mainly concerned with varying the money supply in the economy. The central bank uses some measures like the bank rate, open market operators, special deposits, directives, cash ratio, etc., all to regulate the volume of money in the economy, thereby checking inflation or deflation when necessary. Instruments of monetary policy or how the central bank control the commercial banks. The government carries its monetary policy through the central bank. The central bank itself enforces the monetary policy through the various ways by which it controls the ability of the commercial bank to create credit. The central bank controls the commercial bank to implement government monetary policy through the following instruments. Bank rate or discount rate, the interest rate charged by the central bank to commercial banks for loans or discounting bills. Raising the bank rate controls inflation by making borrowing expensive, while lowering it encourages borrowing to combat deflation. Liquidity ratio or cash reserve ratio, a legal requirement for commercial banks to hold a certain percentage of their deposits with the central bank. A higher ratio limits lending to control inflation, while a lower ratio increases money supply. Special deposit, additional deposits commercial banks must hold with the central bank beyond statutory requirements. Used alongside cash reserve ratio to control inflation. Open market operations, OMO, the buying and selling of government securities by the central bank to regulate money supply. Buying securities increases money in circulation, selling them decreases it. Special directives, instructions from the central bank to commercial banks on the size and sectors for loans, directing credit to specific economic areas like agriculture or manufacturing. Moral suasion, non-binding advice from the central bank to commercial banks on lending policies. Used to influence money supply without legal force, but non-compliance can lead to formal measures. Funding, converting short-term government securities into long-term ones to manage debt and money supply. Nigeria Deposit Insurance Corporation. The Nigeria Deposit Insurance Corporation, NDIC, role is to administer the deposit insurance system in Nigeria and protect depositors. The corporation provides incentives for sound risk management in the Nigeria banking system and promotes as well as contributes to the stability of the financial system. Function of Nigeria Deposit Insurance Corporation. Issuing all deposit liabilities of licensed banks. Giving assistance to insured institutions in the interest of deposit in case of imminent. Guaranteeing payment to depositor. Assistance to monetary authorities in formulating and implementing policies to ensure sound banking practicing and fair competition. Pursuing any other measures necessary to achieve the function of the corporation provided measures. Thanks for watching. See you in the next video.